Thursday, November 30th. And these are the 5 things that you need to know today about the financial news. Let's get right into it. First and foremost, I think we need to acknowledge that at least in the fight against inflation, the Fed is winning. What does that mean, the Fed is winning? The Fed is slowing the job market. We got a report today from ADP that basically says hiring is definitely slowing down. The numbers from ADP this morning were expected to be 190,000 jobs created in the month of November. For reference, in October, we created 239,000 jobs. Drum roll, please. The answer was a disappointing or encouraging, depending on how you look at it, 127,000 jobs created. Again, folks, I believe the Fed is being remarkably clear. Even though the market doesn't like it, the Fed is saying the job market is going to slow down. There will be some pain. And I think they are well on their way to getting there. Where were the jobs? Leisure. Probably makes sense. It's Q4. We're seeing an uptick in services. Did increase 224,000 all by itself. But that means we had to have some job losses. Job losses were in manufacturing, business services, and financial activities. I still believe my call from 6 months ago about this being a white-collar-led recession is accurate. I do believe that will be where the pain is felt most acutely. And again, we got something from DoorDash this morning that they're laying off 1,250 jobs from DoorDash. So again, I think we're going to see jobs go negative, meaning we will lose jobs. It will probably be, February, March of next year. But this is the path to beating inflation. The job market has to get soft. 3.7% unemployment. It needs to go up. It doesn't feel fun to say. If you or someone you know is impacted by this, please know I feel for you. But again, you can be prepared. You can do some things. We have been talking about winter is coming for a while on this channel. So again, point number 1, the Fed is winning. ADP report. But remember, the big jobs report is Friday. Friday. That is the one that the Fed looks at most acutely. The over-under right now is 200,000. If you want to play over-under with me, what do you got? You want to take the over or you want to take the under? Given ADP report, I will take the under. Although always remember the ADP report and the government's report this Friday don't always line up. We've seen some pretty big deltas, but I will take the under. I do think job creation is slowing down. Next, remember, just like we talked about on Sunday, we were going to get some Fed speeches from Fed hawks, and they will move the market. We had James Bullard on Monday come out as a hawk. I believe Jerome Powell today will out-hawk Bullard. He's going to talk about higher. He may even throw out 7%. He may even talk about we will accept a recession to beat inflation. Jerome Powell is going to continue to be that Jackson Hole 8-minute speech, Paul Volcker-esque gentleman, in my opinion. We will know today and we will talk about it tomorrow. So expect Powell to be a hawk. Next, GDP. We had the first revision to GDP. This goes through 3 revisions. This is the first revision. It was actually increased. The initial report had Q3 GDP at 2.6%. It was actually revised higher to 2.9%. And clearly in that data, a recession was nowhere to be seen in Q3. And then let's talk about mortgage rates. Mortgage rates have fallen 3 weeks in a row. Mortgage rates now averaging 6.49. Again, I think what is happening is people are realizing the Fed is flexing its second tool, meaning their voice. They're on camera. And what we have here is the market collapsing the margin. Remember, we talked about the spread being unusually large. We talked, I think, 2 or 3 standard deviations. So what we have now is regression to the mean. No longer is there a 300 basis point spread. Now it's about 2.5. And again, historical norms are 1.7 to 1.8. That is the spread from the 10-year to the 30-year mortgage owner-occ best credit. So again, I think that is collapsing. And again, I believe a month ago or 3 weeks ago, talk of 10% mortgage rates were worth discussing. We were on a dangerous path with that spread growing. I now believe that is off the table. I don't see mortgage rates going to 10% in the next 12 months. Could they see 8? Sure. Could they see 9? Maybe. I don't see 10 currently. That would mean that inflation is really, really sticky and the Fed has to go harder. I don't think that's true. I think we are going to see the easy part of inflation, which might get us to 6%, fall off pretty quickly. So the Fed will go higher. And again, remember, I think tomorrow we get PCE and most importantly, PCE core. That's the number. If you pick one number, that's the number. The Fed will, in my opinion, get the Fed funds rate above PCE core. That I feel good about. We will see where PCE core comes tomorrow. Next up, Tesla, or I should say Elon Musk. Elon Musk said today, or actually said yesterday, I read today, the Fed must cut rates immediately to stop a severe recession. This is not the first time Musk has talked about a severe recession, the Fed needing to change or pivot immediately. I have to ask you a question. Do you think, I'm just asking, do you think Elon Musk gets daily, perhaps hourly updates on Tesla orders and Tesla shipments or deliveries? Do you think we are seeing the backlog or orders shrink because the demand is not there? Tesla is a premium product, no question. And as we talked about earlier, I believe we are in a white-collar-led recession. We are seeing tech layoffs left and right and financial services. My circle of friends play in that space, and many of them have or are wanting a Tesla. We also have EVs coming out from competitors at a much lower price point. So could it be, is it worth pontificating that Elon Musk sees his orders shrinking and he's like, uh-oh, we're in trouble? I know he's doing a lot at Tesla and he's playing with rockets and he's got a tunnel company, but I suspect he is getting daily updates on his Tesla business, and it may not be looking very good. Just curious, what do you think? Let me know in the comments below. Do you think Elon Musk gets daily updates on Tesla orders, Tesla backlog? Leave comments below. I'd love to hear from you because, again, if he's out there screaming, Fed must cut rates, I don't think it's unreasonable to think that he's like, oh my God, Tesla's in trouble. Let me go flex my social media voice and see if I can't have some influence. So I don't know. Let me know what you think. Comments below. Next, Snap. Snap just did something yesterday that you are going to see more and more and more and more and more companies do. Remember a couple of years ago, it was really sexy to say work from home. You can work anywhere you want. Well, Snap was one of those companies. Snap has had a rough year. Snap just said, and I want to make sure I get this quote right, so I'm going to get my notes. Snap orders employees back to the office 4 days a week. You need to sacrifice individual comfort for collective success. Translation, we can't run our company, our creative enterprise, with everybody being remote working in their bathrobes. There is just a collection of ideas in speed and efficiencies when everybody is in the same place. I have worked on engineering projects and creating solutions, And if we weren't together, they would have taken longer, cost more, and been less feature rich. I knew this was coming. Companies that need that creative exercise and that whiteboard and just all of that, you can't do it when everybody is working from home. Snap has had a rough year. They have missed their numbers. Their product creations and all of that is not there. Their CEO knows if they don't get people back in the office, they're dead. Snap will cease to exist. They will be sold for parts, picked up by somebody else, and they will make people get home. There are more companies that are going to demand their employees come to the office or get fired. This is what happens in a recession. This whole work from home, blah, 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 was never going to end well, at least for many companies. Snap, I remember Snap said, hey, we work from anywhere. We're going to shut down our San Francisco office. That was 2 years ago. Now their product is not great. Their revenues suck. And they're saying, get back. And again, I want to quote what they said. Sacrifice your individual comfort for collective success. Remote work. This is what happens. All right, what do we got next? Morgan Stanley. Morgan Stanley coming out saying, hey, we may have a Santa Claus rally in the markets, but they expect the earnings recession and revisions to take hold in Q1, and they see a double-digit decline in the stock market. To which I say, I hope so, because if you watched one of my goal videos yesterday or the day before, I look to deploy $50,000 roughly into dividend-based stocks, and I would love to buy them cheaper. So that's what we got. What else do we have? I have some catch-up items to do. Let's first congratulate some people. We had these mastermind events, and I owed a few people some autographed books. So Vincent, your autographed book will go out today. Bexy, your book will go out today. Ulysses, your book will go out today. And then finally, Alexis, your book will go out today. So hopefully I got everybody that I owed a book. Ooh, almost fell over. I owed a book to, so thank you for that. And then again, folks, if you don't remember, we are doing a challenge. I'm looking to get 1,000 of these out the door in the next 13 months. So this is 1 of 1,000. Roldan and Careza, congratulations. You are 1 of 1,000. Keith, 2 of 1,000. Javier, 3 of 1,000. And Nick and Danny. Nick and Danny, sorry. You are now 4 of 1,000. So I'm going to keep track. You will see on the bottom of these cards, there's a little number. So everybody will get one. And then finally, we're looking to do 100 of these. These cards are special. These cards go out to your first deal. So Tim and Teresa, congratulations. You are 1 of 100. You got the first golden ticket. What these are, folks, is just my way of understanding if one rental at a time is truly helping. I have a goal to send out 1,000 of these and 100 of these. I will number them so we are all up to date at all the time. So get those out. Got to put some stamps on them. And then next, I want to let you know, if you have been waiting for more videos from the One Rental at a Time Mastermind and you are in my course, congratulations. We have just loaded and turned on Dion and Millennial Mike's opening session, where Dion talks about the 6 things to get started, where Mike talks about out-of-state investing. So again, if you're already a member of my course, congratulations this morning. Those videos went live. We have Omar on deck, which will be up next. And if you don't know what this is, I had a mastermind, 9 hours, where we brought in all these millionaires to answer questions from the audience. I am giving that away, that full day away free if you join my course, How to Get Started One Rental at a Time. Today, that course is $399. When this mastermind is fully loaded, it will be $399. I'm being very clear. The price is going up to $399, probably on January 1st. So if you want to get started, buy the course today, save yourself $80. Makes sense. The videos will be loaded over the next several weeks. If you do buy the course, please join the Facebook group, One Rental at a Time Works. It's a place where there's thousands of people doing work and all of that. So again, buy the course, do the work, get ready. There's a video from Beth yesterday talking about getting ready for next year. Get a buy box, look every day, start tracking it. And then finally, the last thing, you guys know that I have this thing called Tree of Fear and Forest of Opportunity. Well, I finally got some samples. I got a couple of samples. So there's the Tree of Fear. Most people are standing right in front of the tree. They can't see anything behind it. So back yourself up and see the Forest of Opportunity. So again, this is an important thing. I remember when I created that saying, it was just off the top of my head. So again, I'm glad I got these samples. I'm going to hang this on my wall in my office because again, the Tree of Fear is real. The negative headlines, the recession, all of that is real. Back up and understand that wealth is created in recessions. I'm very excited, just like I told Business Insider a couple weeks ago, that I'm excited. We're finally getting deals out of the MLS. I'm making more offers, getting more counters. It is a great time to buy cash flow rentals, to make disrespectful offers. So again, do the work, only great deals, 30-year fixed rate debt, cash flow day one. Nothing changes except the opportunity in front of us. The next 18 to 24 months will be amazing, but you must do the work. No gambling, no rushing, only great deals. And if you're lucky enough to do 2 deals, make sure your second deal is better than the first. All right, folks, that is it. Wednesday, November 30th. Very excited. The Fed is winning. ADP report came in light. We're going to go sub 200,000 on Friday. I'm going to take the under. Powell, Tesla warning, all of that. Folks, take care. Have an amazing day. Bye.